Welcome back to another Bitcoin video, guys. We're back here today and we're discussing the 4-year cycle theory. We're also discussing the chance of the 4-year cycle theory getting invalidated and what would that look like. Now, I'm a big believer in the 4-year cycle. I've made myself very clear on this point ever since November last year when I initially made my prediction. I said the bottom will be in Q4. In the recent months, I've said that could spill into January. If it goes into February, that's when it starts looking very ugly, and that's when that prediction could be considered wrong. Now, obviously it's the 19th of December right now. We did see a low around the 22nd of November. So we've got about a month and 10 days, around 40 days left for that 4-year cycle theory prediction to be valid, right? If we see a bottom anytime in the next 40 days, or if we've already seen the bottom, that's a valid prediction. But if we don't, what happens next? And why would that happen? Why would we get dragged out of the 4-year cycle theory in that hypothetical scenario? Well, we need to discuss the opposing argument. And this is an argument that many people, many of my subscribers actually believe in as well. We're going to be looking into what that argument looks like, why I disagree with it, but also why it also holds some weight at the same time. Because if it didn't hold weight, people wouldn't agree with it, right? So we need to discuss that. Before we get into any of that, we need to check out the description and the pinned comment. We've got the VIP group. We've got Crypto Academy courses where you can learn how to trade using traditional TA methods. And then we've also got the free Telegram community discussion group where you can discuss the market with other members of the Wolves of Crypto YouTube channel. Okay, guys, let's get into it. All right, so this is the 4-year cycle on Bitcoin. The 4-year cycle is based on 4 micro-technical analysis trends and 2 fundamental trends. The 4 micro-technical analysis trends are the days from top to top, the days from bottom to bottom, the days from top to bottom, and the days from bottom to top. And the 2 fundamental trends are the election cycle trend, or the presidential cycle trend in the United States of America, and the halving that happens every 4 years on Bitcoin. So it's quite strong. 2 fundamental trends and 4 date range trends, right? That's not something you can just throw out the window. That's something that's quite considerable. So when people say to me, oh, the 4-year cycle was just made out of thin air, it's like, well, no, actually, no, it's not. And it's not even just based on crypto. The presidential cycle trend in the United States of America is a very, very real trend. And this 4-year cycle, of course, predicts a bottom in Q4. Now, it doesn't really give us an exact date. It's kind of up to me as an analyst to kind of roughly determine when that date would be. I have determined over the past year, and more specifically over the past 2 months, that, you know, it could be anywhere between October and January. If we go into February, it's looking rough. Why do I say January? Well, I say January because of the simple fact that the date range trend is not concise enough to be precise, right? We're looking at, for example, 2014, 413 days from top to bottom. In 2018, 364 days from top to bottom. If we go all the way to the end of January, right, for example, we could be seeing... let me just get this up 1 second. We could be seeing 448 days from top to bottom, and seeing as we had a 50-day difference between 2014 and 2018, it's very much consistent with the logic of the 4-year cycle and the facts that we could be seeing a 20-day difference, a 30-day difference from 2014 to 2022, right? It's very rough. Ultimately, I do believe that the bottom will be any time between what it's already been in the 22nd of November and the end of January, and that's what I think about the 4-year cycle. Now, I suppose we need to get into the counter argument. What is the argument against the 4-year cycle theory? And there is one, and it's a very strong argument. I'm not denying the existence of that argument. I think it's very much prominent, very strong. We'll get into it now, right? The argument is this: S&P 500, right? You have it in the white and black. We have the S&P 500. In the orange, we have the Bitcoin chart. I've overlaid them together. What you can see is that these charts are pretty, I wouldn't say well connected, but they are connected, okay? You can see that generally speaking, when we see a peak on the S&P 500, we see a peak on Bitcoin. You can see generally speaking, when we see a bottom on the S&P 500, we see a bottom on Bitcoin. Now, what you'll notice is that there are deviations. For example, throughout April 2021, right over here, I'm circling, it's on the left-hand side of the screen, to July 2021, which is a pretty considerable time period. That's a 3-month period, in fact, almost 3.5 months. While the S&P was going upwards, Bitcoin actually went downwards very sharply, almost 50 to 60%. You also see here in November 2021, Bitcoin topping out significantly before the S&P 500 by about 2 months, and by the time the S&P topped out, Bitcoin was down 40 to 45%. So you do see deviations. And another one, for example, Bitcoin was seeing higher lows here, S&P 500 was seeing lower lows, right? Again, you do see deviations, but it's undeniable that for the most part, these charts are at least slightly connected. And so you could make the argument, and it's a very valid argument, you could make the argument that if the S&P 500 is destined to go down a lot further, which it is, and we'll look at that in a second, I wouldn't say destined, but it's quite likely, then it will drag Bitcoin down. and you'll say that if it drags Bitcoin down, then Bitcoin will break the 4-year cycle theory, and Bitcoin will bottom out a lot later than the 4-year cycle theory suggests. This is the argument, right? The argument is based on this. Now, bear with me for a second. I'll explain this chart. I know it looks a little bit complicated. In the orange, we have interest rates. In the blue, we have the S&P 500, okay? What you'll notice is that I've drawn yellow and pink vertical lines in this chart. The yellow line that I've drawn in this chart, each one of these yellow lines, represents the period in time that that interest rates topped out. Represents the period in time before the first decrease in interest rates, right? Before the first decrease in interest rates, that is what this represents. Now, the pink line represents the S&P 500 bottom. The writing that I have on the screen here is the period of time between the first rate decrease and the S&P 500 bottom, okay? Let me just explain this. We do not see, historically speaking, on six occasions historically, we do not see the S&P 500 bottom out until interest rates have started decreasing, okay? When they start decreasing in the yellow, there is a period of time between the yellow and the pink that is full of corrections until the S&P 500 finding the bottoms. So you could say this. You can make the argument. The interest rates are not expected to top out until March, okay? They're not expected to top out until March 2023. They're not expected to start decreasing until September 2023, right? So what we can do is we can go ahead and we can draw a yellow line, at September 2023. Let me just delete these lines quickly. That is when interest rates are expected to top out. That is when the first decrease is expected to happen in September 2023, okay? So we can go ahead and be like, well, what are the date range? What are the... Sorry, I'm trying to explain this. It's quite complicated. How long between the first rate decrease and the bottom has there been historically? There's been 3 to 21 months. So based on that, we could be seeing the S&P 500 bottom as soon, based on the historical data, as December 2023. That is the soonest point, the closest point we could be seeing the S&P 500 bottom out if you're taking that date range trend very seriously. If you're taking the trend we have very seriously. So again, let me just explain it one more time. I know it's quite complicated. S&P 500 doesn't bottom out until interest rates start decreasing historically. Generally speaking, there's a period of time between the first decrease and the S&P 500 bottom. That period of time at the lowest point could be 3 months. Therefore, if we see the first rate decrease in September 2023, we will not be seeing the bottom until at least December 2023. Okay, so based on this trend, which is it's not a certainty, it could very well play out very differently. And there's reasons to believe that we'll get into in a second. Based on this trend, we won't be seeing the bottom on the S&P until at least December 2023. Okay, then you could go ahead and say, well, if we're not seeing the bottom on the S&P until December 2023, then how do we expect to see the Bitcoin bottom in Q4 this year or January? And that's a very valid argument. Now, the first point is this. All right, I'm not denying this argument's validity. It's very much valid. The first point is this, though. For the first time ever, this is the first time ever. So this is a trend that relies on historical data being repeated over time, of course. For the first time ever here, we've seen the Federal Reserve raise rates during a decrease on the S&P 500. We've never seen that before, okay? Generally speaking, if you look back here in the historical trend, we've seen the Federal Reserve only decrease interest rates when the S&P is dropping. For the first time ever, they're raising rates while the S&P is dropping. This creates a point of difference between this time and previous times. So we could be seeing it play out very differently. Now, that's the one point I wanted to bring up there. Now, okay, so try to freestyle this video here. What I will say is this, okay? This trend is very much valid. It could very well play out. What I will also say is this. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the reward center. It's got everything you need for a trader using an exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into it. There is no point in data There is nothing on this chart, on the 4-year cycle, at all, throughout this entire cycle, that tells me that this time is different to other times. If I didn't know anything about the recession, which of course I do, but hypothetically if I didn't know anything about the recession, if I was looking at this chart and I only knew about the 4-year cycle, I would say that this cycle, this bottom, this bear market, is exactly consistent with what is meant to happen even in a regular 4-year cycle. So how am I to throw the 4-year cycle out the window based on speculation, based on the S&P 500, when it looks completely normal at this point in time? And guess what, right? If the 4-year cycle theory is wrong, our reactions to the market don't change, okay? Look at what we've got here. This is our buying plan for Bitcoin. I don't have it written up, but our buying plan was this. We bought 17 to 18K. We bought 50% of our portfolio. We're going to be buying another 50% at a break of this yellow line or at a touch of 11.5K to 13.8K. That remains true regardless of what the 4-year cycle does. So what's the big deal? It doesn't matter. It's completely irrelevant what the 4-year cycle does. It's only relevant for macro, I guess you could say, understanding. That's the only reason the 4-year cycle theory is relevant. It's relevant for macro understanding and it's relevant for financial planning. If it actually turns out to be wrong, our buying plan on the Wolves of Crypto channel does not change. It remains exactly the same, regardless of whether the 4-year cycle is correct or not. So, what I will say is this. Knowing that our reaction doesn't change and reactions make money, and knowing the fact that this trend has shown me on the chart no reason for me to believe it not to be true at this point in time, why would I throw it out the window? Would I rather not just wait until it's actually invalidated or proven correct, of course? You know, would I rather not just wait until February? If February comes along and we haven't seen the bottom yet, we're still crashing downwards, cool, it's invalidated. Doesn't change anything for us, doesn't change our reaction to the market. But if I throw it out the window now and say the S&P is going to go down further, therefore Bitcoin is, even though this is a unique cycle on the S&P we've never seen before, while the 4-year cycle remains valid, then, you know, I could just throw out a trend that's completely valid. I would rather, this is my opinion on the 4-year cycle right now, I would rather wait until it's invalidated and then be proven wrong, than throw it out the window preemptively and for it to be valid. Because at this point in time, I see this trend as nothing but valid. Nothing in this trend right now tells me it's not continuing to play out. We have seen the Bitcoin 4-year cycle play out against the odds. We saw it here in November. We saw while the S&P 500 was still moving to the upside, while quantitative easing was still happening, we saw Bitcoin top out, right? We saw Bitcoin down 40% by the time the S&P 500 topped out. We can see the same thing to the downside. Now, it would be a stretch and it would be the first time in Bitcoin's history that sees such a big deviation, but it is certainly possible. And by all metrics that we've seen here in the 4-year cycle following the previous trends in the previous cycles, we've got no reason to believe it won't play out at this point in time based on this chart. Now, if you bring in the speculation based on this trend here, of course you have reason to believe it's not going to play out. It's not that there's no reason to believe it won't play out. It's that based on what's happening within the 4-year cycle itself, it is following the trend perfectly. You don't throw out something that is following a trend perfectly. You throw it out when the trend is invalidated. That is how investing should work. That is how long-term investing works. The trend is your friend until it ends, right? That saying is not made up. It doesn't come from nowhere. That's a very popular saying that has existed for decades. The trend is your friend until it ends. At this point in time, the trend is still our friend on the 4-year cycle theory. I don't see why I would throw it out now. Now, do I think it's certain? Not in the slightest, it's not certain. But do I understand that regardless of what happens to it, my buying plan will be the same? Yes. And for that reason, I'm not overly concerned with judging its validity right now. I see it as perfectly valid on the chart, and until it's not valid on the chart, which would be a break past February without seeing the low, I'm going to see it as valid on the chart. I believe in the 4-year cycle theory. I do believe it's the strongest date range trend Bitcoin has. I believe it's based on the election, the presidential cycle as well, which gives it some backing in the macro, and I do believe it will play out. Now, I could be wrong, of course, and this chart very much does make a very good case for that. If I'm wrong, I'll cop the L at this point in time. My buying plan's not going to change regardless, so I understand quite clearly, and I think everyone on this channel understands, regardless of whether I'm wrong or not, your buying plan's not going to change. It's not going to change how much money you make. So let's hope it's right, because I can tell you right now, if it is correct, that's excellent, because the more the 4-year cycle theory plays out, the more it's correct, the more macro predictability Bitcoin gets, the more institutional investors and retail investors alike are confident to invest in Bitcoin long term because they see it as a safe asset with a clear macro trend. You want these trends to sustain, and it would be a damn shame if it didn't. It's possible, but it would be a shame, and at this point in time, we don't have any reason to suggest based on this chart that it won't. Drinking game. Take a shot every time I say the word 4-year cycle theory. I say that word a lot. All right, guys. Thanks for watching. Hope you enjoyed. And I'll catch you in the next video. Cheers.